She put it in a pile on the kitchen counter. It looked like every other piece of government mail she received. Brown envelope, CRA logo, her name and address in the window. She had been retired for 3 years. She filed her taxes every April without fail. She assumed it was routine. It sat in that pile for 11 days before she opened it. When she finally read it, she did not understand what it said. The language was technical. The numbers did not match anything she recognized from her tax return. She set it aside to deal with later. Later became 3 weeks. By the time she called her accountant, 34 days had passed since the date on the letter. Her accountant went pale. The letter was a notice of reassessment. The CRA had recalculated her tax for the previous year and determined she owed $6,400. She had 90 days from the date on the letter to file a formal objection. Not 90 days from when she opened it. Not 90 days from when she understood it. 90 days from the date printed at the top. She had 56 days left. Her accountant filed the objection in time. The reassessment was overturned. But if that letter had sat in the pile for another 3 weeks, the deadline would have passed, and the $6,400 would have been legally owed, regardless of whether the CRA's calculation was right or wrong. I spent 28 years inside the Canada Revenue Agency. For most of that time, I worked in the Compliance and Reassessment Division that sent the letters I am about to describe. I know exactly what each one means, what it requires, and what happens when the deadline passes without a response. The CRA sends several types of letters to Canadian retirees every year. Most people cannot tell them apart. Most people treat them all the same way, as routine correspondence that can wait. That assumption is the most expensive mistake a retiree can make. So let me walk you through the 5 letters the CRA sends most frequently to retired Canadians, what each one actually means, and exactly what you must do the moment each one arrives. Let's start with the one that arrived in that woman's kitchen pile, because it is the most consequential and the most misunderstood. The Notice of Reassessment. When you file your tax return, the CRA processes it and sends you a Notice of Assessment. That is the document that confirms your return was received and shows your refund or balance owing. Most people know what that is. The Notice of Reassessment is different. It arrives after your original assessment, sometimes months or even years later, and it means the CRA has reviewed your return and changed something. Maybe they recalculated your income based on information slips they received from your financial institutions. Maybe they disallowed a deduction you claimed. Maybe they adjusted a credit. The reassessment shows the revised numbers and the difference in tax owing or refunded. If the reassessment results in additional tax owing, you have 90 days from the date on the notice to file a formal notice of objection. That objection goes to the CRA's Appeals Division, which reviews your case independently from the original assessment. If the Appeals Division upholds the reassessment and you still disagree, you can take the matter to tax court within 90 days of the Appeals Division's decision. Here is what I need you to understand about the 90-day window. It is absolute. If you miss it, you lose your right to object. The CRA does not grant extensions because you did not understand the letter. They do not extend the window because you were on vacation or in the hospital. Once 90 days pass from the date on the notice, the reassessment becomes final and legally binding. The tax is owed. Full stop. The only exception is an application for an extension of time, which requires you to show that you had a bona fide intention to object within the 90 days, and that it is just and equitable to grant the extension. These applications are not guaranteed. They are discretionary. Do not rely on them. When a notice of reassessment arrives, open it that day. Look at the date at the top of the letter. Write that date on your calendar and count 90 days forward. That is your absolute deadline. Call your accountant or tax advisor within the first week. Do not wait. Do not assume the CRA is right. And do not pay the amount owing immediately if you plan to object, because paying does not stop the 90-day clock, and it does not constitute agreement with the assessment. You can pay to stop interest from accumulating while you object, but payment alone does not resolve the dispute. Second letter. The T1 Adjustment Request Response. This one works in your favor, but it comes with its own complications. If you or your accountant filed a T1 ADJ requesting an adjustment to a prior year return, the CRA will eventually respond. That response comes as a letter or a revised notice of assessment. The issue is that the CRA's response sometimes adjusts only part of what you requested, or it introduces a new adjustment you did not ask for. I reviewed a case during my time at CRA where a retired man in Calgary filed a T1-ADJ requesting a disability tax credit for his wife retroactively for 5 years. The CRA approved the disability credit, but simultaneously adjusted his medical expense claims downward for the same years, offsetting part of the refund. His net refund was $3,200 $200 less than he expected. He did not understand why. He assumed the CRA's calculation was final. It was not. He had 90 days to object to the medical expense adjustment. He did not know that. The window passed. The reduced refund became final. When you receive a response to a T1-ADJ request, read it carefully. Compare every line to what you requested. If anything was adjusted that you did not request, or if the result differs from what you calculated, treat it as a notice of reassessment. The same 90-day objection window applies. Do not assume that because you initiated the adjustment, the CRA's response is automatically correct. Third letter, and this is the one that confuses retired Canadians more than any other. The OAS Recovery Tax Notice. If your income exceeded the OAS clawback threshold in the prior year, currently $90,997 for 2024, the CRA sends a letter in the spring informing you that your OAS payments will be reduced starting in July. The letter includes a calculation showing your prior year net income, the threshold, and the amount of OAS that will be clawed back over the following 12 months. Most retirees who receive this letter are confused by two things. First, they do not understand why their income exceeded the threshold. Second, they do not know whether the CRA's income figure is correct. On the first point, the most common triggers I saw during my time at CRA were RRIF mandatory minimum withdrawals that pushed total income over the line, part-time employment income combined with pension income and CPP, rental income from a property that seemed manageable individually but stacked with other sources crossed the threshold, and one-time capital gains from selling investments or property. On the second point, the CRA's income figure comes from your filed tax return. If your return was accurate, the figure is correct. If your return contained an error, the figure may be wrong. This matters because you can file a T1-ADJ to correct the prior year return, which would change the clawback calculation. If the CRA used an income figure that was inflated by an error on your return, correcting that error can reduce or eliminate the clawback. When the OAS Recovery Tax Notice arrives, compare the income figure in the letter to line 23,600 of your prior year tax return. If they match and your return was accurate, the clawback is correct. If they do not match, or if you believe your return contained an error, contact your accountant immediately. You cannot stop the clawback from starting in July while you investigate. But if you correct the prior year return and reduce your assessed income, the CRA will recalculate the clawback and adjust your future OAS payments accordingly. Fourth letter. The CRA review request, sometimes called a pre-assessment review or a matching review. This letter arrives before your assessment is finalized. It asks you to provide documentation supporting a specific claim on your return: medical expense receipts, proof of charitable donations, documentation for a home office claim, rental income records. The letter usually gives you 30 days to respond. This is not an audit. It is a request for supporting documentation, but it carries the same practical risk as an audit if you ignore it. If you do not respond within the time frame, the CRA will simply disallow the claim, issue an assessment without it, and you will have to go through the objection process to get it back. I sat with a retired couple in a consultation session who had claimed $14,000 in medical expenses on their return. They received a review request asking for receipts. They assumed their accountant had submitted everything already. He had not. The letter went unanswered for 6 weeks. The CRA disallowed the full $14,000 medical expense claim and issued an assessment showing $2,100 in additional tax owing. The couple objected. They eventually provided the receipts and the objection was resolved in their favor. But it took 8 months and caused significant stress. When a CRA review request arrives, respond to it immediately. Gather every receipt, every statement, every piece of documentation that supports the claim they are questioning. Send it within the 30-day window. If you need more time, call the number on the letter and request an extension before the deadline. The CRA will often grant a short extension if you ask in advance. They will not grant one after the deadline passes. Fifth letter, the installment reminder. This one is different from the others because it is not a dispute or a reassessment. It is a payment reminder. But it carries financial consequences if ignored. The CRA requires quarterly tax installment payments from individuals whose net tax owing exceeded $3,000 in the prior year or the year before that. For most retirees, this applies if you have multiple income sources that are not fully withheld at source. Your workplace pension withholds tax, but it does not know about your CPP, your OAS, your RRIF withdrawals, or your rental income. If the combined tax on all those sources exceeds what your pension withholds, you may owe more than $3,000 at filing time. The CRA sends installment reminders in February and August, telling you what payments are due on March 15th, June 15th, September 15th, and December 15th. Most retirees who receive these letters for the first time are confused and concerned. They think they owe money they did not expect. They sometimes ignore the letters, assuming it is a mistake. It is not a mistake. Ignoring installment reminders does not eliminate the obligation. If installments are required and you do not pay them, the CRA charges installment interest at the prescribed rate, currently around 9%, on any shortfall. That interest runs from the date each installment was due to the date you actually pay. By the time you file in April, the interest has accumulated for months. I reviewed a file where a retired couple had received installment reminders for 2 years and ignored them both times, assuming the letters were optional suggestions. When they filed their annual return, they owed $4,200 in tax, plus $680 in installment interest and penalties. The interest and penalties were avoidable. The moment an installment reminder arrives, call your accountant or log into your CRA My Account and look at your prior year tax owing. If it exceeded $3,000, installments are likely required. The CRA's calculation of your installment amounts is on the reminder letter. You can pay those amounts, or you can calculate your own estimated amounts based on your current year income. Either way, pay them on time. Now let me bring all of this together because the pattern I see across every one of these letters is the same. A retiree receives a letter from the CRA. They do not recognize what type of letter it is. They do not know what it requires them to do. They set it aside. Days pass, sometimes weeks, and by the time they act, either the deadline has passed or the situation has become more complicated than it needed to be. The woman I mentioned at the start was lucky. Her accountant filed the objection in time, and the reassessment was overturned. But she came within 56 days of losing $6,400 simply because she treated a CRA letter the way she treated junk mail. So here is what I would suggest you do right now, before any letter arrives, to make sure you are never in that position. First, set up a CRA My Account if you have not already. Every letter the CRA sends you is also available in My Account. You can see your reassessments, your correspondence, and your account balance online. Crucially, the 90-day objection window runs from the date on the letter, not the date it appears in My Account. But having online access means you can check your account regularly and catch letters before they arrive in the mail, or if a physical letter goes astray. Second, when any CRA letter arrives, do not put it in a pile. Open it the same day. Look at the date at the top. Write that date on a calendar. If the letter is a notice of reassessment, count 90 days forward from that date and mark it as your absolute deadline. Third, if you do not understand what a CRA letter is asking, call your accountant within 48 hours of receiving it. Not within a week, not after the weekend, within 48 hours. The nature of the letter determines whether you have 30 days or 90 days to respond, and you cannot know which it is until someone who understands the system reads it. Fourth, if you receive a review request asking for documentation, gather your receipts and respond within the 30-day window. If you need more time, call the CRA and request an extension before the deadline, not after. And fifth, if you receive installment reminders and are not sure whether they apply to you, calculate your prior year net tax owing from your notice of assessment. If it exceeded $3,000, installments are required and the reminders are not optional. Pay them on schedule. The CRA does not send letters to fill your mailbox. Every letter they send has a legal purpose and a legal consequence. The deadlines printed on those letters are real. The rights you lose when those deadlines pass are permanent. I should say clearly, I am a retired civil servant, not a licensed tax advisor. For your specific situation, consult a CPA or tax lawyer who can review the actual letter and advise you properly. What I have given you here is the framework, the 5 letters most retirees receive, what each one means and what you must do the moment each one arrives. The woman from the kitchen pile eventually had her reassessment overturned. Her $6,400 was never paid, but she still talks about how close she came. 11 days in a pile nearly cost her everything.